Testing. Alright, guys, so today we're going to talk about um, the Forex business is actually just like any other business. So, what do I mean by that? Is that in Forex, um, like for example, if you are trading with EAs, automated trading, you will realize that there are a lot of EAs that goes out of um, their alpha decays. What that means is that it expires. So after a while, it becomes not so profitable. Maybe there will be an year or a 2 year, So uh, what can you do about that, and why does that happen, and how can we fix that, and how can we go around that and still be profitable? So in this video, I'm going to talk mainly about that. So first, I want to talk more about the concept how Forex business is actually much more similar to any other businesses. So what I mean by it being similar is that in Forex business, for example, um, the EAs that you use to trade, the expert advisors that you use to trade whatever symbol that you're trading, gold, Bitcoin, or whatever, it might be working for a while and then it doesn't. So there's an author behind it, that the person that created this EA that's allowing you guys to follow them, to buy their EA, and then whenever it updates, whenever market changes and it's not so profitable and then they need to do some tweaks, they will let you know, and because you've bought from them, you will get the updates and you will still remain profitable. And so that is the author part. It's like a manager in a company. So the frontline worker, let's say in a McDonald's, okay, the frontline employee, the cashier and the one that's flipping the burgers, is the EA, expert advisor. The EA is just following the frontline employee, like the EA is just following some orders, just doing exactly what the manager told them. They doesn't care about the adaptation and whatever the market needs. They don't think too much. They just follow the orders, do the work as they are required to do, and then get paid. So in Forex business, we are like too advanced from the society. So it's no longer a person doing the frontline work, is already AI or some robot doing it for you, or algorithms. Okay, so we are like 50 years ahead of the normal society in here. So in here, like robots are doing stuffs for us. Okay, so the robots does their stuffs, and after a while, the manager behind it sees that, oh, the trend is changing. Okay, the business is changing, and everything between it is changing in the business. So what they do is that they the author starts doing some fixing to the some tweaks to the EA, gives them different orders to adapt to the market. Okay, and that's the responsibility of the author, which is the manager. Okay, what managers does after that, like you are kind of in a CEO position where you hire managers. You buy them off or you hire them or whatever, and hiring them is just like paying them to do their job, is to handle the EAs, the frontline workers. Okay, so if the manager is not doing his job correctly, he's sick, or he has expired, or he have he wants to change their business, get into another business, or they want to quit, or they are dead, you'll have to replace the manager. So it's the author, you have to replace them. it'll be better if you know how to do the author's job and you are the CEO. That would be even better. But if you don't know, you have to hire managers. And managers have different incentives than CEOs to make money, in a different way. Um, the CEO's responsibility is more like um, changing the managers. If there's some problem with the managers, they just change them, you know, and they understand like the advantages and disadvantages of that manager. So they change them and they tweak things around them. They fulfill some disadvantages with some other stuffs, and they fulfill the advantages, or they double the advantages the manager might have. Double their strengths and recover or fill their disadvantages with something else. So that's the job of a CEO. And a CEO can have a lot of managers. Okay, so we can have a lot of authors. That's what I mean. So that's the job of a CEO to replace the managers. Okay. Um, you can either be a CEO or you can also be a shareholder, and you can hire a CEO or you can um, either pay the CEO with commissions or pay the CEO monthly. So what CEO is a signal provider. So signal provider is just like signal services like Signal Start or Kobe services, where you attach your account there to a person that manages people's accounts or their own account, and your account being attached to them, and the account is being managed. Okay, so that's the job of a CEO, to help you grow their account, and you as a shareholder, that's why you hire the CEO for you. Okay, so he handles all the work. So even if a manager below them is not doing well, they will just change them. So they will handle everything that has to do with adaptability. Okay, the only time that you need to change your CEO is that when they're not doing their job well, or they cannot find a good um, manager. They cannot adapt to the markets. They cannot see the writings on the walls. They cannot, you know, go and they're just not being profitable anymore. There will be a lot of signal providers. You will see that they fail after a while. They don't know how to do their job well. They don't adapt. They stick to the same managers that they have. Um, they don't change. So that's why they even CEOs fail. Okay, so you as a person, as a shareholder, when you hire a CEO, you also need to be very careful. Okay, um, shareholders can have their own advantages and disadvantages. Being a CEO can have your own advantages and disadvantages, and being a manager have your own advantages and disadvantages. If you have a if you are a manager, you are an author, you created an EA, like maybe hundreds or thousands of people buy the EA from you, and the EA will cost like $500. So you might make 500,000, or $1 million, just like that. Okay, or even more. Okay, so um, being a manager can also be profitable. Being a CEO is a different story. It's like you hire managers that do all the stuffs for you. Okay, you buy the EAs, and the authors are handling it good for you. And your job is just to find investors or people that pay you commission based on you handling the portfolios. And that could also be profitable. If you have enough investors, you can still be rich. Okay. And then there's a shareholder's perspective. It's the one that invests into the EAs, into the CEO, into the signal provider. Is that they don't need to worry too much about stuffs. The CEO is going to do all this. work for them, adaptability and everything. All the shareholders needs to do is that they can either find more money in, okay, if they trust in the CEO, okay, they can find more money in, they can borrow money from somewhere, or they can ask other people to invest with the CEO, and then the CEO gives them a commission based off that, or they can just invest their big big load of money or small load of money, whatever, and they can have passive income. So everybody have their own advantages and disadvantages. So in my group here, for this purpose, right, I've shared in my group this freedom algo. I have many sections here, okay. I'm kind of doing like CEO kind of job. I would like to have more CEOs, okay, even more managers if it's possible, like more EA authors, whatever. But having more CEOs is also good. Kind of doing a CEO kind of job in here. Um, I have something called midterm investing, where people can put their money in, and then they can uh, make like 1 to 2 risk to reward ratio. For example, they can be risking 30% of their portfolio or 40%, but like making 80% gain a month, But that 40% could happen only once a month, or no, not once a three, once a 3 months or 4 months. So you are way into profit and like maybe gain 200, 300%, and then you have a drawdown 40% or something like that. Okay, or you can decrease the risk to like 10% of risk and then make like 20% of gain per month. Okay, so something like that. I'm doing something like that in midterm investing. And then in long-term investing, I have something like that has even much more higher risk-reward ratio where the risk is way lower and your reward is way much higher. Okay, making something like that. It could be something like 1 to 7 risk-reward ratio. The 1 is risk and 7 is gain, or even above that. Okay, so I'm building something like that. People can come in and invest. If you don't want to spend time on learning how to make EAs, how to make portfolios to make it run. You want something hands off, you can do that. If you want to learn it right, you can go to the EA section. We discuss here how to make the EAs work. And then in EA instructions, we have all the instructions how to set up the EAs. These EAs, the EAs inside EA instructions are the ones that are profitable, and I've explained deeply how you can um, how you can set them up and become profitable yourself. So there are lots of them. Each of them have different risk reward ratio and personality. Some have few trades in a month, some have a lot of trades in a day. You can choose your own, okay. And yeah, this is all about it. So something more about my group is that there's crypto trading inside it. We are discussing about crypto tradings, platform discussions. Okay, how to set up a VPS. How to make your VPS set up in a way that's even more profitable. EA results. We share results here of our EAs that we are testing, whether they're profitable or not. Education, professional gambling, risk management EAs, like how to make your EA to be more safe so you don't lose all your money at once when your EA fails. So it's all in here. Indicators, like indicators that you can have. Okay, a lot of indicators are here. You can check them out. So yeah, this is all, and hope you guys learned something from this. If you like my content and want more content, please let me know in the comments what you need, what you want me to talk about. And I hope you guys have a good day and all the best.